Here we go. So, a lot of you have maybe some kind of SMC, liquidity, or any type of retail strategy out there. So, does everyone in the call here perfectly understand structure? Yes or no? Not perfectly. Good. This is an interactive call. You guys need to answer when I ask questions. Okay, probably not. Perfect. Cool. So when it comes to structure, it's very important to understand that um, you need to identify it properly to be able to understand uh, how it works. Do you guys know the difference between internal structure and external structure? Okay. Yes. Okay. Perfect. So if you see this, what is this? An internal structure or an external structure? Why is it an internal one based on your answer? Goes inside of structural leg. Uh, doesn't make a new low. Veselin 47 has the correct answer. So this is an internal structure because it fails to make an actual new low. Remember, your goal is to identify the structural points. This is the structural leg. As you can see, it goes higher. So this high is actually good. It's a valid external structure. But since it fails to make a new low, you update this and this becomes an internal structure. And now you have this actually making a new high and now making a new low, right? So this is now an external structure. And I've taught that to V1 very late because I did a mistake. I really thought that everybody was an expert with structure. And I was kind of surprised that they weren't. So the way we identify the external and the internal is I put some red dots. Okay, the red dots are the external structural leg. The blue dots that I like to put are the internal structural legs. Okay, so if we do this like this, of course, you could maybe start putting like everything here, but it's completely irrelevant. Let's just mark the pushes, okay? So as you can see, this point here fails to make a new low, but then makes a significant high of this point, and then this point makes a new low. When you are drawing and live until this point is taken, this is still a valid external structure. This is why you should update your chart from left to right, not the opposite. Okay. Try to make sure that you update your markups according to the new information in the chart. So when it comes down to this is a video you will get maybe this week or next week. When it comes down to structural shifts, you guys do understand that in some cases, they want to create a trap, right? Everybody understands that. Yes or no? Yes. So let's check an example of a trap. We have people buying here. Then we have this structural shift with speed and momentum. As of now, we don't have any stop losses here because this is most likely the first breakout. But when price does that break with speed and momentum, it possibly entices people to enter if it comes back to this zone. This is called a smart money trap. And it's even nicer when the smart money trap provides a reaction to then induce higher, right? So the enticement is engineered at the structural break. The liquidity is engineered when they provide that reaction. Okay? So this is very important to understand. The characteristic of a false break of structure is speed, momentum, manipulation, no liquidity. I said it, no liquidity, and in line with the overall bias of the day. So let's say the whole day is bullish. You want to have an F boss on the opposite direction of the structure. So if it's bullish, you want to have an F boss bearish. Does that make sense? Because based on what I've seen on some of the questions, that's not the case. So be honest with yourself that is this something that you do understand, but maybe struggle a little bit or no? Because when it comes down to marking up in hindsight, I noticed that a lot of people mark up F bosses the wrong way. Let's say they would put this as an F boss, right? Because this one does this, fails to make a new high, makes a new low, creates a reaction, and then does this. People would mark this as an SMT. Are you one of them? Yes or no? Perfect. Do you see the overall, and we're not going to make the same mistake than V1, I'm going to make this clear from the get-go. Do you see the structural intention? You see that we're bearish the whole day, right? So this is not enticing anybody to short because the price is already shorting. Does that make sense? This actually is the opposite. They're enticing people to buy to get them involved with this smart money trap to then engineer the liquidity. And what's nice about it, we even have a small reaction. And then look how it dumps, right? It needs to always be on the opposite direction. And this, I'm talking purely about F bosses and purely about IF bosses. You will know in the video what's the difference between IF boss and an F boss. It's pretty simple. This one is internal, and this one is external. So obviously, when you go to compare them, external F boss is always more relevant than internal, right? So this is very important. As you can see, this is, who can tell me if this is an IF boss or F boss? Please. IF boss. All right. IF boss. Now, when it comes down to a structural shift, there is a potential. Like I said, remember the example I was giving here. When there's a structural shift, there's the enticement. When there's the reaction to the SMT, there is the liquidity engineered. So this will define if price can continue higher or no. The reaction of this SMT, and if this SMT has weight in it, well, you'll learn that in the future. So not every single F boss will have a reaction perfectly like this. But the F boss, it doesn't matter if it's for SMC traders or for anybody else, a structural shift is relevant for a lot of retail traders. Let's continue. Now, price induces low. The first thing to do when we have an inducement of Asia session, doesn't matter the pair, doesn't matter the day or whatever, we always want to look to the left. So we look to the left. As of now, we don't have anything relevant. So we don't look at anything, right? The only pure liquidity we have has been taken here, and we have also liquidity here. Now, the only thing to do is wait. So price reacts to no man's land, creates more price action development, and now we have our first buy, a first structural high. Do we have, in your opinion, breakout entering here? Yes or no? Perfect. And remember, this is just a justification based on my own research, and you can see this is also a reason why this low hasn't been taken, and this is why this isn't an F boss. Not F boss, sorry. Once you are, and this is really important, what I'm about to say, really important. So I want everybody to drop their cell phones and drop TikTok. It's time to focus. This structural shift was against the overall structural day bias. This point actually went lower, right? Now we had that new structural high. You see it. Everybody sees it. But we identify that we don't have liquidity here based on the first breakout. But if you want to identify this as an FBOS while you're trading, that's not a problem. Okay. You can identify this as being a structural switch, and you're trying to target, let's say, this SMT. Okay. Let's say you identify this as an SMT. Oops, where's my thing? Let's say you identify this as an SMT. There is no liquidity here. Remember, the liquidity is engineered at the reaction and not at the structural shift, because this is the same thing than this. It's the first buy, so most likely there's no breakout traders entering. So we need to wait until price comes back into the SMT. And have you noticed the difference in time until it comes back? We're talking about 3 freaking hours until it comes back into this potential SMT. So this is another characteristic that is very important. Look at this, how they structural shift in 35 minutes come back. When you have an enticement to enter, you want speed, momentum, manipulation, and you want no doubts that they're trying to engineer the SMT. When price, and this has been explained multiple times to V1, when price takes its time to come back into the potential trap zone, this could most likely become a relevant break of structure. This will be explained in the future, so please don't ask questions about it. V1 should understand, but you guys will all understand very soon. There's other characteristic on here how to know that this SMT isn't a trap, but I'm not gonna go into too much details about it because I have a lot of videos and I don't want to spoil it. Let's come back to the actual PA. When I repeat, there is nobody, not even me, that can specifically say that at this moment, this is a valid POI to target or an SMT. So usually what you want to do is do this. and put an alert, let's say, around this zone, right? Just above. So you put an alert. Alert. The new evidence that the PA gives, let's say you have that potential reaction of that imbalance. I don't know if it goes in imbalance, decisional POI, most likely also. This is the trap zone for the trade away, but I'm not going to go into too much details about it. But the definition of an SMT requires, first of all, I said it in the beginning, speed, momentum, manipulation, swiftness, no doubts. Look how long it takes. Look how long it takes until we can justify that this POI has been potentially hit. Okay. And then as you can see, price just leaves, and a lot of people will want to enter here to then target the low, right? And this is also a mistake because where is the only relevant liquidity of the day? It's here. Because this would be the first structural shift, so no breakout traders. And we identified that this SMT was pretty sus because it took 25 hours before it gets in. Looking at the candle's behavior is one of the most important things a trader should do. There's no set in stones when it comes down to identifying liquidity. You are like a doctor, you're trying to identify side effects, symptoms to then diagnose a disease. Same thing goes to trading. Even though you're trying to trade away from this point and continue the day short, you need to stack all of the proof that you have to be able to understand the reasons why those trap zones are not trap zones. So let's continue. Let's play price. I don't even remember what it does. I think, yeah. Okay. So do you notice the way it, with speed and momentum, liquidates the only relevant liquidity of the day? So let's go back into the structure. As you can see, we have this structural leg, right? We identified this one here, right? Afterwards, this makes this new high, right? Protecting this high. So the expectation would be price to continue lower. As you can see, it makes this point here and then makes a new high. You see it. So as of now, these 2 points, is price bearish or bullish at these 2 points? Like at this one or this one? Is the price still bearish or bullish? Bullish. Bullish. Everybody's wrong. It's bearish. It's bearish because remember, until this high gets taken, we're still bearish. This fails to make a new low. So this is the first evidence that potentially we're preparing a structural shift. Now, look how it fakes this structure to then go lower, right? You see it now. And now this can be identified as these equal lows to then push onto the new structure where it gets broken here. So this is now a structural shift. Switch. Okay, so let's identify the colors. Oops, can I copy that red thing? Thank you. As of now, this is a, let me just erase all this. Do you see it? Oops. Do you guys see it? Yes or no? Where it's switching in structure. And look at the next day. This is EU today. Isn't it surprising that it just continues? This needs to be blue. It just continues into the perfectly structural shift. legs, right? See, structural shift has been made, price just continues. Okay. This, I'm very, very sorry if there's people that are more advanced, but this is like basic baby pip stuff. Very, very common, very, very simple. So I was surprised when I had to explain it uh, to V1. But this internal and external structure is very simple. And when I started teaching in the shelter, I was kind of surprised that I had to explain what an internal and external structure was when I've learned this maybe in my fourth month of trading. Very, very simple. If you cannot identify the difference between an internal and an external structure, maybe you have went a little bit too fast. This one would be here because this one fails to make it yellow. Maybe you went a little bit too fast into your journey. Okay. And there's no shame about it because you're here for a reason, right? If you think that you didn't understand um, potentially structure, you're here for a reason, right? And do you guys now understand why this isn't an F boss, right? This thing here isn't an F boss. If this point would have made a low, would have this been an F boss or IF boss? Yes or no? An F boss, sorry. Would this be an F boss if it made a new low? Yes or no? I have more no than yes. Can you guys tell me why? Is it yes or no? Okay, I'll try to draw it just to make sure that everybody understands. If this, oops, if this, I'm drawing the internal structure. Let's say this, let's say if I can even do this for you. Okay. And let me put it in blue. If this would have done a low, would this be in your the term I have boss or F boss? Focus on would this be a false breakout structure? Yes or no? Ignore the I or F. Would this be a false breakout structure? A trap? Yes or no? I have a little bit too much 50-50. The answer is this would be an F boss because even though we're talking about the internal structural leg, we had a clear switch that has been done here. See how this one makes a new high from here? This one makes a new high from here. This would be an internal false breakout structure. If this would have gone here, this would have been an external false breakout structure for the intraday perspective only because we would have switched the trend here, right? You can see it, how it's switching. Even if it's the internal structural legs, it has already switched. Here, it hasn't. It's just continuing to the same direction. Here, it fails to make a new low. This is the first switch. We identified it earlier here. Yes or no? And this is only purely on internal intraday PA. If you're looking at higher time frame structure, the actual structural shift would have been here. So then when price would have done this over here, this would be a F boss. But of course, we are intraday traders. Do you understand? Yes or no? I really need you guys to be honest because otherwise I'll go to the next example. Yes. If I see more than five no, I will continue. Otherwise, I'll request people to rewatch a video. About intraday perspective, if you don't, that's normal. I'm talking purely about structure being switched into a trend like forming. like this. Well, okay, that's good. Let me just try to give you into a perspective of the perfect example of here. Let me draw it up, like literally over it. Everybody will understand it that way, I think. This is the same actual structure that we have. I have identified this as a IF boss. Why? Because it failed to make a new low. You confirm. This is the trap here. If we look at it on the lower time frame, price would have done something like this to continue, right? Like this. Right? SMT, SMT, SMT. Okay, perfect. Right. I'm sorry. I'm so such a little freak. Okay. And this is not an F boss, but price did this and this. Let me just check if I'm right. Exactly. And it did this. And I saw some members drawing this as SMT and this as FBOS because they didn't know the term IF boss on their charts. This is the definition of a hindsight trader that actually doesn't ask himself questions. He just looks at the outcome and he sees this and he's like, this is a POI that didn't hold, so this is an SMT. Do you get it? The difference between understanding the PA and drawing like a 12 years old on the chart. It's very important because you guys will get smoked if you don't understand these concepts. Have you understood that how can they try to stimulate and entice people to go short if the price is already short? Does that make sense? Now, when the price switches and does this and does this and then does this, this is a valid FBOS because the trend has switched to bullish. Now I want to know with this explanation, does it make more sense? Yes or no? Every single enticement to go into an opposite direction requires a trend on the opposite direction. So for the people that said no earlier, can you tell me I said no and now it's more clear, please? I want only the people that said no earlier. It's more clear. Okay. It's not completely clear and it's normal. This is your first example. We will have about 6, 7 videos about it. Okay. Sorry, I'm drinking my tea. So, do you understand the difference and understand the reason why the videos are not everything when it comes to trading? You need to have someone that actually tells you you're doing things right or no. Because I've had hundreds of thousands of people talking to me. I've seen your leaks video, I've seen the videos, and I still don't understand. Obviously, if you see Ronaldo play football, can you play like him? Of course not, because you haven't done what he's done. So make sure that you understand that the videos are just there to have a visual representation of the strategy so I don't have to repeat myself 1,000 times. You guys will have to actually put in so much work to understand these little intricate difference that it's going to be all worth it. Okay. Some of you guys will have nightmares about F bosses, and some of you guys will actually love them. My favorite trade setup is an F boss. Okay. So if you guys don't mind, I would like to continue. Is it clear for now? Can we continue? Good. Perfect. All right. Let's continue. So now, when it comes to identifying structural legs, it also gives you an indication of the potential direction of the day, right? So if you see that a structure is still, let's say, a bullish, right? Until this point here is taken, you can accept the fact that potentially price will continue lower. And we're purely talking about structure. We didn't involve any liquidity in it, okay? And there's a big and very important aspect that people need to understand, that it's not because afterwards, let's say here we have equal lows and there's liquidity, it's not because we have liquidity built that it will be taken the same day. Let me just repeat myself. It's not because we have liquidity built that it's going to be taken on the same day. It's very important because a lot of people expect price to be liquidated completely the same day. Okay. So let's continue. Euro USD again today. Let's see if you guys learned one thing or two. I want someone to identify on the chart here using the pen tool, whoever's volunteer, first come, first serve, to identify where is the most relevant FBOSS of the day. IFBOSS or FBOSS. Whoever's ready can take the pen. Let's go. Draw one line. Don't be shy. I don't know if everybody can draw. Okay, perfect. I don't know why Rima is doing this thing here. I don't know why this person is doing this here. Everybody that this did this here, all right. Okay. Okay, let's remove your things. It's pretty clear. Let's remove everything, please. Can I erase this? So someone said this. That's wrong. Somebody said this. I don't think this one is wrong. The person who has annotated that one here. Can I have the purple person remove that thing, please? So somebody said, how can I remove this? How can I remove this crap? There we go. I removed it. Cool. Let's go back to work. So um, the person who has identified this, that person is not wrong. Um, and usually when you identify an FBOSS, if it's this one or this one, usually the trap is around the same location, right? So here, as you can see, look how there's speed and momentum switching the trend, right? This is the FBOSS. I don't like this one, so let's remove it. This is the IFBOSS because this one is an internal structure. So if you would identify only the structure that breaks, you would put this as the SMT, and that would be the valid SMT for the internal break. But this one is actually the higher structural leg, right? This one actually looks better. So this is why I would identify this as a trap zone. And look how it's not so clean. I just put the zone to justify the reaction because it happened in a matter of minutes. And as you can see, reaction, engineering the liquidity, coming back into a lot of people in V1 already know that. This is the inducement POI and it just leaves. The only unfortunate situation about this one is that it actually leaves some equal lows below and it makes the new high. So it actually creates even more weight into that these equal lows. And I was in a live trading session with a student this morning and we were discussing about that. It's just unfortunate that they could have at least created SMT going lower and spoke that crap and then leave, but they didn't. Okay. These are unfortunate situations, but we go with it. And the proof is I took a short here. See? So I was just continuing to trade into um, the liquidity. So when price didn't engineer the SMT, I just saw this. I saw the break in retest zone. So I was like, oh, okay. They will maybe do the FBOS around Asia low, right? So I was trying to trade into the enticement. And I took a short like this. And I got a lovely break even. And then price did this. I took 25% off. And then it's smoking me. And he even slept me. I had to open a ticket with my broker so they can refund me this loss because I had like at a maybe Irina, if she's on a call, I think it was a 2.5, 2.6 pips stop loss. And I actually lost 10 points to it, 10.1. Um, but I contacted my broker so they will refund me this loss. So I'm happy about that. So let's continue. And we have that SMT reaction and boom, 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 boom. And basically price just continue here because of news. Yeah. So basically when you are in break even and you prove it in the log, I've taken some money here. My stop loss was a little bit below my entry and I lost actually like 10 pips. Losing one or 2 pips is normal. 10 pips is too much. So that's the responsibility of the broker. It's basically just a glitch or that's not supposed to happen. So if you contact them, um, they will refund you by removing the commissions of your next trades. So basically, you will save up that money. So that's, of course, you can contact. Uh, you shouldn't lose money. 10 points. Having slippage is okay. 10 points. This is not called slippage. This is called like a server glitch. It's like if you use your brake and it's slippery on the floor is slippery and you just continue without braking. You're gonna contact the company, the car company, right? But you can always contact your broker. God damn it, it's your money. There's no way. That's not a prop firm thing. Prop firm, they would say, fuck you. With real brokers, oh, there's always a way. You have the logs, you have the proof. Good luck. And especially because I was recording myself. So this is even worse. So let's continue. In here, let's do the internal and external structure. So if we go from previous day, the external structure is still the same, right? Okay. As you can see here, this makes a new a low. It doesn't go lower than this one, so it's still not a structural shift. Then this one fails to make a new low, so automatically this one becomes a internal. Now this one fails to make a new low, and it's normal, and it didn't make a new high. So these ones are internal, and you could go and put all these ones as internal, but it's always a time. Let's put some relevant stuff here. Okay. So as you can see here, this one fails to make a new low also, and this one also. So this would be an internal of the internal, and this is getting a little bit too much. So we just remove them. And now this closes, as you can see, it fakes, closes above. At the moment it closes above, we have a confirmation that the structure is continuing. And now this is there. Now, as live PA, the low of this low is this one. If price does this and then does this, I will update this one and put it here and put this one here, and all the rest will be internal. Do you notice and understand the difference between internal and external structure now? Very important. It's very simple, basically. Like a lot of people overcomplicate it. You have one point. This is a low. This is a high. This is a lower high, a higher low, whatever it's called. This is a higher high. This is a higher low. This is a higher high. This is a higher low. This fails to make a new high. This becomes a lower high or higher low, whatever you call it. Boom. See? This here, let me just put it in red. And now let's pull out the blue thing. And let's put it like here. This is the internal one of the external structure. See? Everything in between those legs are the internal structure. Do you see how it fails to make a new high, but then this one is still protecting from this one that made the new high? Do you see it? I really need to make sure that this is clear. Because do you see that this one pushes and makes the new high? Let me just draw in black. I'll repeat myself 1,000 times if it's necessary. I want this to be mastered. This point has been a new low from this point. This point has been a new high, right? It broke that structure. Here, this one hasn't made a new low and made a new high, so this one is in the same trend. See, this one broke this one and has been engineered by this one. Now this point comes here. Until now, on live market, you think you expect price to make a new high, but it fails. And the only way to know it fails is when this one makes the new low. But as you can see, this one hasn't made a new low from this one and then makes a new high. So this becomes the internal one, right? It looks like a character. This is the teats. Let me put his arm here, and this is his tail. It looks like a fucking dinosaur. See? Do you notice? Okay. You understand the difference between internal and external structure. It's very important. I'm not joking. Like, I'm going to tell you 1,000 times, this is one of the most important things because you cannot understand a false break of structure or internal false break of structure without understanding the actual structures. Okay. Let's do another quick example. Then I'm going to go into questions and then I have an important meeting. I need to go. I understand it, but my problem would be knowing when to focus on the. Let's do the questions after, if you guys don't mind. So hold this question, YY Traper. Okay. Let's continue. Let's go in AUD USD. As you can see, price is going lower. Do you see it here? C, 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 C. You see it. And put it in red. Very, very clear, right? See? Here, price starts internally creating those new highs. But until it makes a higher than this one, this point here, there is no indication of that structural shift. And as you can see now, price does this here, now goes here. What happens if it does this? This means that this point here, let me put in the color again, this one here, and this one here, and this one here, sorry, becomes the internal leg of that overall structural leg. I hope this is clear. I hope this is clear. It's exactly the same thing. This example is the same than this example, but on the opposite direction. Do you see it? And now, if price decides to do this, then this is going to officially be called the structural switch. It doesn't mean that there's a structural switch or shift or whatever, that it's a manipulation. that it's an F boss or whatever. Okay. So I think that this is enough examples for today. What happens with structure and F boss and IF bosses, and this is potentially going to be the video this week that it's going to be launching on Friday, is that most of you will not understand it because in the videos, it's so explained. And this, I think, it's my biggest issue is I understand these things from the back of my hand. So it's so easy for me to see it. So it's like if I was trying to explain you how to brush your own teeth on in the morning. You do it every single day. You know how to do it. Try to explain it on like on a video how to do it. It's gonna take me a couple of times to understand your way. So it's normal that you guys don't understand in a matter of minutes how to use F bosses and IF bosses. So please don't get too harsh on yourself. But the word to remember is I don't want to see any IF bosses and F bosses against a trend on the same opposite on the same direction than a trend, like this thing. I don't want to see this anymore on the charts. Stop focusing about the reaction. And I know some of you guys know that you have been doing this. I'm not going to say any names because I've seen it on the technical questions, but I see all the charts. So I know every single person when they do a mistake. And I've seen multiple people doing this. Just because there's a reaction, they identify this as an SMT, but they don't ask themselves the real questions. Are we really enticing people to enter here? Yes or no? Of course not. It would be completely stupid to create a trap to short when the price is already shorting. That doesn't make any sense. It's like if it's asking you to do exactly what the price is asking you to do. So there's no enticement, there's no manipulation. They're not trying to trap you in any way. So this is very important that you guys understand this. So I'm gonna stop the recording and we'll go into the Q&A questions.